Here's your October 2024 housing market update for the city of Edmonton. We're going to be looking at prices and how individual market segments are performing for apartments, townhouses, and detached homes. So let's jump right into it. All right, let's get started with the market as a whole. So this is basically going to be looking at the overall health of the Edmonton real estate market. It's everything clumped together, all property types. The absorption rate was sitting at 35.73%, which dipped down a bit from August when it was at 42.26%. Nothing alarming there from my perspective. There's always a seasonal shift. Actually came a little bit later this year since the summer market was so strong. Usually we start to see that dip in July, August, but July actually went up a little bit, and then August was not too far off from June, and now it's come down a bit more for the month of September. Average price for the market as a whole was sitting at $410,659. Number of active listings at the end of the month was 4,321, which was up 2.88% from August, so a slight increase in total inventory at the end of the month. That was down 7.65% from September of last year though. Number of sales was sitting at 1,544, and those were down just over 13% from last month, but up 7.97% from September 2023. Average days on market was sitting at 38 days versus 34 days last month, so it's crept up a little bit, but still relatively low. And then in terms of the price distribution, you can see that we've got 16.64% under 200,000, 15.38 between 2 and 300K, just over 20% between 3 and 400K, and 21, almost 22% between 4 and 500K. That was the largest segment of the market. And then the fifth biggest segment was between 5 and 600K with 12.89% of the market, and then 6.41% between 6 and 700K. Then there's only 2.78% between 7 and 800K, and it goes down from there. Looking at the detached home market, the absorption rate was sitting at 35.02%, which also had a dip from August when it was at 44. Still technically balanced market territory, getting closer to buyer's market. That wouldn't be a strong buyer's market even if it dipped down a little bit, so don't get too excited. Average price was sitting at $538,185. There was 2,290 active listings at the end of the month and 802 sales. So the active listings were up 13.93% from August, so a pretty significant switch in the active inventory. So inventory levels were rising for detached homes, but they're still lower than last year. They're 13.88% lower than last year. Now the sales were down 10.89% from August, but up 2.95% from September of 2023. And the average days on market was sitting at 36 days for detached homes versus 33 days last month. So crept up a little bit, but even if you compare that to last year, it was 42 days, same time last year. So market is still performing better than it was last year. Now, in terms of the market distribution, there was only 1.14% of those sales under 200K, 4.39% between 2 and 300K, 18.75% between 3 and 400K, and 30.82%, the largest segment between 4 and 500K, so very active in that price range. And then there was 21.73% between 5 and 600K. Between 6 and 700K, you got 11.32%, and just over 5% between 7 and 800K, and 2.68% between 8 and 900K. Now let's take a look at the benchmark prices for detached homes. We'll be looking at both one-story and two-story benchmark prices. Starting with the one-story benchmark prices, the September 2024 benchmark price was sitting at $414,900. You can see that it's trended down a little bit in the last couple months. It would have peaked in July this year, but I wanted to bring your attention to some of the movement that we've seen in just the last couple of years. The last time we had a peak was May 2022 when it peaked at 406,800. As you can see, we're now above that 2022 peak, and there was a pretty significant drop from May 2022 to January 2023 when it hit a low of 350,000, and then it crept up again basically from there, and it hit its peak for 2023 in August when it went up to 377,700. So you can see that that 2022 fall winter, we saw a significant drop. That was due to the interest rates mostly catching up to everything, but we still had a decent run up in 2023. And the main thing I wanted to point out is that even though there was still a seasonal dip in the fall of 2023, it hit its lowest in November 2023 and went up quite significantly since then. So even though 2022 had a pretty significant fall winter dip, wasn't the same thing in 2023, kind of just went sideways for a little bit. bit, and then it went back on track with upward pressure on prices. Now we're sitting in September 2024, and the question is this year going to be more like 2023 or 2022? I would suspect it would probably be more like 2023, not really expecting that significant of price drops in the fall and winter months, especially since the interest rates have been coming down so much. That seems to be getting people excited. With that said, even if interest rates drop a bunch, if they drop a bunch, it could be because the economy is really not doing well. I do still believe Edmonton and Alberta in general are better positioned to weather that storm, but the rest of Canada is not looking so good in most cases. But that's kind of where we're at. Let's take a look at the two-story benchmark prices now. All right, so for two-story benchmark prices, in September 2024, the price was sitting at $523,100, which is still below that April 2022 number. That was $531,200. They haven't gone up as much as the one-story single-family homes. I did talk about this in the last month's update. I think it's because these are higher price point in general. They weren't quite as affordable as those one-story homes, so they didn't have as much upward price pressure in the last year compared to the one-story homes. They did have a similar sort of pattern though, where April 2022 is that last peak, and then it hit a low in January 2023. 2023 saw some modest increases, and then it really didn't go down much in the fall and winter, but it has gone up quite a decent amount since then. So again, I think more than likely we'll see something somewhat similar this year. It'll be more similar to 2023 than it was to 2022 in my opinion. All right, now we're gonna go back to the stats for semi-detached homes. But before we jump into that, I wanted to give you guys an opportunity to set up a free consultation call with me. If you're considering buying or selling in the Edmonton area, I am a real estate agent with YEGPro Realty. I'd love to help you out any way I can. You can go to booktrevornow.com and you can select a time on my calendar to set up a free consultation call. You can ask me anything you want about buying and selling real estate, about the market. I can help guide you on anything from financing to what the pros and cons are of different property types and areas. You can also reach me directly at 780-819-5508. Again, that's 780-819-5508. All right, let's continue. Semi-detached homes. Now this market's looking quite a bit different than the detached homes. This is like half duplexes where you're connected to one neighbor, but you're not in a condo. Now the absorption rate was sitting at 54.45%. So it's still seller's market territory, but moving into a weaker seller's market. It was pretty strong last month when it was sitting at an 83% absorption rate. So that has eased up a little bit, but still strong activity there in this market, making it pretty tight on inventory. Average price was sitting at $415,574. And the active listings, there was 292 at the end of the month, and there had been 159 sales. The listings were up 26.41% from last month, but they're still down 18.6% from the same time last year. And the sales were down 17.62% from August, but up 9.66% from September of last year. So I would say that increase in inventory is the main thing, but the sales dropping a little bit as well helped move it closer to a balanced market instead of a strong seller's market, although technically it's still a seller's market for this type of property. Average days on market was sitting at 30 days, which is the same thing as it was in August, so that stayed stable. It was 36 days in the same time last year. And in terms of market distribution, again, there's like hardly anything under 200K with 1.23% of the market, almost 11% between 2 and 300K, and 33.5% between 3 and 400K. And then the largest segment was 4 to 500K with 39.02% of the market. So interesting that we're seeing so much of the market between that 4 and 500K mark. Big drop after you get 500K with 10.95% of the market between 5 and 600K, and then 3.14% between 6 and 700K. Now for row townhouses. So this includes townhouses that are condos, which is, I would say, makes up the majority of this market, and also what we call residential attached, which are not condos, but you're attached to more than one neighbor. So it looks a lot like a townhouse, and that's why they would refer to it as a row house. Now the absorption rate for this market was sitting at 56.86%, so still a seller's market, but again, very similar to semi-detached. It's not quite as strong as it was in August. It has dipped down, moving closer to entering a balanced market territory, but we're still in a situation where I would say there is upward pressure on prices, even though we're in the fall market now. Average price was sitting at $283,071, and the active listings, there was 452 at the end of the month versus 257 sales, and the active listings were up 17.1% from August and down 16.45% from September of last year, and the sales are down 18.41% from August and up 24% from September of last year. Average days on market was sitting at 36 days versus 29 days last month. So actually see be an extra week on the market on average in 1 month. That is a significant change, but it was sitting at 41 days same time last year. This market, you can see that there's a bigger chunk of it under 200K compared to almost everything else, with 21.24% under 200K, 34.54% between 2 and 300K, and 35.26% between 3 and 400K. So but basically between 2 and 400K is 70% of that market. Usually the newer ones are going to be that 3 to 400K, and if you look at slightly older stuff, you know, early 2000s, 90s, that's where you'll often be the 2 to 300K range. 4 to 500K is 7.61% of the market, and then hardly anything above 500K. Now let's go look at the benchmark prices for townhouses. So benchmark price for townhouses in September 2024 was at $261,600, so slight dip from last month, but nothing significant. We've seen pretty significant increases in townhouses. The last low was February 2023 at $210,000. It had gone up quite a bit by July and then kind of zigzagged a little bit. Didn't really drop at all in the fall of 2023 or winter kind of 2024, and has gone kind of straight up since then and is zigzagging a little bit right now. I've seen strong demand for townhouses that's continued. It is a tighter market. Like if you look back at those inventory levels I talked about, there's not a ton of them. There's not thousands of them on the market. So an extra 50 sales or an extra 50 listings can really swing the balance quite a bit and move the needle. But I believe a lot of people are looking in this market segment simply because it's more affordable still than getting into detached homes. We saw price increases in detached homes, and we've seen price increases in townhouses. So there's people that can afford to get into this market, but they can't get into detached homes. I believe that's part of what is driving this market right now. The apartments is again much different picture in this market. Absorption rate was sitting at 25.33%. Not a huge change from last month, but it did drop 4 or 5% from August. In August, it was almost a balanced market, or barely reaching balanced market. It was a little bit further into it in July, but you can see just looking at the 13-month history here, there's some ups and downs in the absorption rate with apartments, but we haven't seen any big swings either way. It's kind of been bouncing back and forth between almost balanced to falling back into buyer's market territory quite regularly. Average price was sitting at $195,116. Active listings at the end of the month was 1,287, and there was 326 sales. So just how I mentioned, the townhouse market's quite tight. There's only several hundred listings. There's not thousands, but apartments, there is quite a few listings with 1,200 listings. So it's not gonna swing as quickly if there's an extra 10 or 20 or 50 sales, just because there is a decent chunk of active inventory. With that said, the active inventory is up a little bit from August. It's up 3.79% and down 4.74% from the same time last year. And the sales were down 13.3% from August and up 6.89% from September of last year. Average days on market was sitting at 49 days, so it did creep up about another 7 days. Yeah, it went up a week as well from August when it was at 42, but it's still doing a bit better than it was same time last year when it was at 54. 60% of the market's under 200K, then almost 31% between 2 and 300K, and after that you're like luxury condo basically if you're looking at apartments, with 6.1% between 3 and 400K. Now let's go take a look at the benchmark prices for apartments. All right, so the benchmark price for apartments in September 2024 was $193,000. It's shown a decent gain from January when it was at $170,000. I wanted to point out that the last time prices were around where we're at right now was in September of 2018 when it was at $199,200. At that point, it was on a downward trend. So if you go further into 2018, it dropped further, but there has been some price recovery in apartments since January 2023 was kind of that low. But looking at this graph, you can see that it had been on a downward trend basically since 2015. And this is the first kind of decent upswing that we've seen in it in this year, 2024. I talked about this a little bit last video on what part of the apartment segment this applies to, and I still need to do a bit of a deeper dive on that. I do not think this applies to the entire apartment segment. This is the benchmark that's moving, which has a description. If you guys want to know about that, let me know, and I could try to do a more specific zoomed in video for apartment condos, because I definitely did not feel like apartments across the board went up this year 20K, 23K. Some of them still felt like quite squishy in buyer's market territory and had to drop prices more than you would have wanted to. So take this a little bit with a grain of salt. Depends on the apartment that you're looking at selling or buying, but nevertheless, it has been doing better from a price perspective than it has been for quite some time. All right, that's it for the Edmonton housing market update for October 2024. I I hope you got value out of this video. Make sure to like and subscribe. And again, if you have any real estate questions, feel free to reach out to me at 780-819-5508 or go to booktrevornow.com to set up a free consultation call. All right, I'll see you on the next video.